Welcome back to Golden Rule Radio, your weekly update on the precious metals market and those fundamentals and technicals that move that market. We've been seeing silver quietly moving higher. It's been up about 4% from the low around $14 an ounce. And gold yesterday had a little pop. What was that about, Tori?
You know, yeah, silver to that first point, 1427 low, all the way up to 1487 high since last week's recording. That is 4% volatility, which is double what we've seen in the Dow, double what we've seen in gold. And it's actually shrunk that gold-silver ratio down from a little over 85 to 1 down to about 81.5 to 1. So that's pretty good. But the gold bounce, you know, all the speakeasy going on out there, it's really sort of this Italian debt crisis concern now. If you ever wonder if gold is a hedge on currency crisis, even if it's just the rumor, fear no more. It's still the case. And we'll see if we don't get a Greece-like type of debt restructuring or concern in that Italian region.
So looking at Jim Sinclair JS Mindset this morning, it looks like, I believe, Poland had their first major central bank metals purchase since like 1998. So I think that brings all central bank buying up to 260, 270 metric tons, which sounds like a lot compared to a lot of other asset classes. You're only talking, about $9 billion worth of gold bought up by central banks this year, compared to the trillions of dollars in debt signed on just this past Friday, or almost $1 trillion in new debt signed on Friday while we were all staring at Kavanaugh, but we'll get to that here in a minute. So we are seeing some increased buying as the price of gold continues to trend down, and I'm going to argue we are still in a downtrend until we get into some of those higher numbers that we talked about last week and the week before, 1260, 1270 on the gold price, $15.50 to $16 on silver. So we'll look at some charts here in a second. But we are starting to see some action outside of just the traditional Russia buys gold, China buys gold, nobody else cares. So to see at least a European Union country come in and pick up some gold this past week, that turns my attention a little bit. Not enough to get excited, but I think some people are starting to chip away at it.
Yeah, those are all good points. It brings to mind something that I recalled today with a client, which was the purchase that the Bank of India made years ago, 2008, 2009 timeframe, when gold was breaking back above 1,000. And it actually created a floor. India bought this gold, I seem to remember 450 tons of it, at an average price of $1,045. Well, the only time that it even came back down to test it, it didn't hit that number, and we've never seen gold back to that number. So I don't know if this is any significance with this Poland purchase, but it did bring that to mind, and so I thought I'd mention that.
I think that is key, and you got to remember, too, all the gold in the world above ground in physical form values less than $7 trillion. So, Miles, your figure that you mentioned might pale in comparison to many other investments or the total value of gold, but in terms of the percentage of the gold that represents, that is high. The other thing that you guys mentioned with all that central bank acquiring of gold, what we have not seen is anybody go in the opposite direction. So that's been really key. And Robert, remember, it was China buying tons and tons. It was India, as you mentioned, buying tons and tons. Russia, Turkey, none of them have started unloading. Iran is trying desperately to be dealing in gold now with the European Union. So it's still carrying the load that it's supposed to be carrying.
So with those points all being somewhat fundamental, let's look at the technical. The last few weeks, we've been talking about how gold's stuck in a range. It's been that way for about a month. It's between about 1170 and 1210. Whichever way we break out of that range, I think is where we're headed. Miles, did you have something to add on that?
Sure. I mean, we did, we have this pop
Smiling.
back up. Well, it's funny because obviously we do a show about precious metals, and it's not just because we want the dollar price to go up. I mean, nobody has control over that when you look again and just say, oh, by the way, 800 trillion or $800 billion spending package in a single day. I mean, this stuff happens all the time. We spend so much more money than we bring in as a country, plus tax cuts. On top of that, I'm all for having more money in my pocket, but at what expense? So where else do we go from here except for more inflation? So obviously, you stretch that timeline out long enough, 10, 20 years from now, of course, gold is $5,000, $10,000, 10 million. It doesn't matter. I mean, does it matter at that point? So when we try to look at some of these charts on the short run, I mean, in the long run, we know where we're going. And the reason we do these shows every week is we're just looking for the best possible opportunity within the last week What's the best opportunity? Where do we find places that we can take advantage of overpriced things or underpriced things? But short term here, I mean, you can't deny that gold is in a short-term bear trend. And unless we get to those prices we've been talking about the last couple weeks, 1250, 1260, 1270, and we can argue a signaled turnaround, gold's probably staying here and then possibly going lower. So like Robert said, 1210, 1170, we got to pick a decision. And if it doesn't, sooner than later, doesn't move above 1210, then it's going back down to 1170. It's that compressing pennant we saw in silver over the last few months, and eventually it just ran out of steam and dropped $1.
Lower than 1170 or to 1170?
Well, I'd argue 1170 is the current floor.
Sure. But,
So
you're trying to
lower
predict
than-
a little bit longer, forecast. Are you saying that you think more at this point that it's going to break below 1170 than you think it's going to break above 1210 to put you on the spot?
I would say the longer it stays between those two numbers, the more likely it is to go down than up.
Okay. I had a day trader client of mine call today, and that's what she focuses on, not just with the precious metals prices, but she is buying for the first time in 4 years because she loves where we are. And she also agrees with what you just said, and that is that we're likely headed lower, at which point you just add to more ounces. But from a long-term technical standpoint, this is making it a really, really good entry point for her.
When you compare that to, say, the short-term outlook on the dollar, which I would argue probably is still higher. I mean, we've got this now. I know I'm branching into more Robert's territory than mine, but looking at the long-term chart of the dollar, you've got a potential massive head and shoulders pattern building over the course of like 3-4 years. So long-term, the dollar, I would argue, is trending down. Long-term, gold is trending up. Now, that doesn't mean we can't see that not play out as things correct over time. But yeah, I think that's where we're going multiple years down the road. So from my standpoint, I would like to continue to own things that are not subject to a declining dollar over the course of a decade.
Well, and on the short term, the reason you're seeing the dollar strength, there's sort of 4 key headlines floating around the media right now. One, obviously, we had the rate hikes, right? That's strong dollar policy. Then you got Powell downplaying inflation risk this week, a week after hiking rates. So they're happy with the 2%. They don't see a risk there. You've got consumer sentiment is hitting an 18-year high, right? So of course the dollar is going to have just that perceived strength. And you've got wage growth at a 17-month high. Those are 4 major headlines that are all bullish for the dollar, albeit in a short-term cycle.
Before we leave the metals, we haven't talked about rhodium on this show. We will try to follow it, but we want to direct your attention to the McAlvany Weekly Commentary. They have a really good segment on rhodium. If you don't know what rhodium is, go tune into the McAlvany Weekly Commentary. They also talk about platinum and palladium for those of you who follow that market as well. Before closing it out, I think we have to point out the dollar's headwinds is going to run into the 97 range. That's where it tried to penetrate as it went up. And if we do see the dollar rise, then I think that's where it's got to get through before it actually turns bullish. I would say that it's yet to be determined, both on the gold side, on the dollar side. You have some more data that's needed to be able to determine what's going to happen next. What's the next big trend?
And we also have fourth quarter reports that'll be coming out in the next 2 weeks. Remember, the federal government's fiscal fourth quarter just ended, so it's off cycle with the calendar year, and that's when the real numbers start to roll in. So you can sit there and spread rumors, you can make conjectures. However, it's the data that matters, and we're going to be getting that data in the next 2 weeks. That does it for this week of Golden Rule Radio. Thank you for listening. Thanks, Miles. Thanks, Tori. You can follow us on Twitter at ICA Gold. You can like us on Facebook. You can visit our website at McAlvany.com, or you can call us at 800-525-9556. Thanks for listening. Have a good week.